I'm Gosselin here. Can everyone hear me?
Yes,
Outstanding. How many participants do we have here today? Doesn't look like we have too many. So why don't we do this? Hopefully everyone has the ability to take their mic, unmute their mics, and so I want this to be an interactive group. And let me see if I can share my screen. I apologize for being a few minutes late. I'm traveling. I'm in Minneapolis today. Let me start off with sharing a put in the chat box a link for a survey to get a sense of where we're at as far as activity in the commercial real estate market. Okay, so I got a link in the chat box. For those of you that are here, if you could give that a click, and there's 7 questions in there. Would love to see where we are at as a group. And then let me share my screen. So let's see how we're looking on the survey.
Hey Tim, this is Bailey Wolf. Can you hear me?
Bailey, I got you. How you doing?
Good. I don't see the link for the
I don't either.
You didn't see it in the chat?
in the chat.
No.
Thank you for the heads up. Let's try that again. Don't see it. All right. There we go. All right, so that should be a clickable link for everyone. Donna, were you able to get it?
No, I cannot see it.
You tried clicking it?
In my chat area, it says web chat. Nothing's there.
Bailey, did you see it?
No, I wrote a message in the web chat, and then I don't see any other messages in the web chat. So I don't know if you're posting it somewhere else.
Interesting.
So looks like Jalen or Michael, you guys see it? It's the webinar chat.
Yeah, I see webinar chat, but I don't see anything in it.
Do you see my message down? Oh, Kalia.
Okay, Kalia says you have to say everyone.
Everyone.
To
There
everyone.
we go.
Send to
Oh,
everyone.
there it is.
Ah, thank you, Kalia.
Thank
Teamwork.
you.
Oh, it's not giving me access.
No.
I have to sign in.
Never mind. Maybe that was just a bad idea. Well, how about we do this? Let me ask some questions in the, how about you put your answers in the chat box? On average, how many commercial real estate transactions have each of you closed in the last 12 months? 1 to 2, 1 to 5, 5 to 10? What does that look like? And then just put your answers in the chat box. So we got Helen with 1 in the last 12 months. Krista. Call it 10 on average. All right, next question. How many of you have access to CoStar to look up product that's for sale, for lease, not LoopNet? We can talk about that later, but CoStar, the ability to log into CoStar and see sales comps for sale, for lease, pull up a survey for a client. How many of you can do that? So just a yes or a no. And then the next question, how many of you have access to AIR forms? So a little background, CAR forms in the residential world is what dominates purchase and sale agreements. AIR is in the commercial world is what we use for leasing and purchase agreements. How many have access to AIR? And yes means you do, and no means you don't. And so these are also just great questions where if you're looking to get into the business, access to CoStar, knowledge of, familiar with the AIR forms, these are questions that are only going to help you going forward. And then finally, a letter of intent. You don't use these very much in the residential world, but in my world, in the commercial world, if you have a client that wants to lease or purchase a building, you don't necessarily come in with a purchase agreement. You usually come in with a letter of intent, which is going to outline a lot of the deal points that would be in a purchase or a lease agreement. How many of you have a boilerplate letter of intent for either lease or for sale? Yes, you do, and no, you don't. I appreciate the feedback. Does anyone have, before I begin the presentation, does anyone have questions on whether it's CoStar or LOIs, AIR? Does anyone have any questions on that? And feel free to unmic, and as long as there's not any background noise, you can leave it unmiked if you'd like. No questions? Come on.
Tim, I have a question. This is Donna.
Donna, fire away.
Where do I find information on the contracts I'm writing and negotiating, if the investor or seller, owner speaks a language that is not English.
Okay, well, so I've had this come up where I've had individuals that have looked for property along the border, San
Mhm,
Ysidro, Otay Mesa, specifically along the 905.
mhm.
And the way that I've handled that is the contracts are in English, but then what I do is I'll partner up with someone that can speak fluent in Spanish. And this way here, I'm able to address, communicate, help them out, understand their goals, but ultimately the contracts are done in English. Does that answer your question?
Yeah, I have done that for many years. I have many Spanish speaking people,
Yeah.
uh, affiliates, let me say it that way. But now I am getting questions from people who are from India, people from China, uh, the Philippines, other countries.
Yeah, and that's where you're going to want
Germany, my international clients who came here and I helped them find leases for 3 years, and then they move to another country in the world. And this is what they do with these big businesses here in San Diego and Orange County.
Yep.
Okay. So back to my
Yeah.
question.
You got to partner up with someone that speaks the language,
Okay.
but I've
Okay.
always found that the contracts are done in English.
Yes,
uh,
they are.
Everywhere that everything
Okay,
that
but early in the game, and 47 years ago when I started real estate, the contracts were in Spanish and I could read it and my clients could read it. Now
Hmm.
it's not there. They're not available.
Well, Donna, I can
You
only
don't
tell you,
know. Okay.
yeah,
Okay.
I
Thank
started
you.
this, I started my career in 2005, and
Uh-huh.
all I've
Okay.
seen are contracts in English.
Okay. Yeah, well, that's all I can find now. Thank you.
Any other questions before we begin? All right. So the way that I set up the presentation is I made an assumption, but I wanted to ask before I went down this road of I'm assuming that the majority of the participants on the webinar, and again, I apologize for being late. Not that was not good on me. So I'll fall on that sword and say I'm sorry. I had made an assumption that the vast majority of those that were going to be on the call were not full-time commercial real estate professionals. So you're in the right group because that's what the assumption that I made. So essentially is how can you, maybe you don't have access to CoStar, maybe you don't have AIR forms, the contracts. How can you make money in the commercial real estate industry? And let me just start off by saying, for those of you that do residential full-time, I am not your competitor because I have a mantra, and that mantra is if you can live in it, I don't have anything to do with it. But yet, when I'm talking to my clients that own commercial buildings or have businesses and are looking to buy a property or lease a property, I have no problems asking them where they live, how things are working out with their current residents. And when they ask me, hey, Tim, can you help me out? My answer is absolutely yes. Even though I can assure you, I will not compete with you. Why? Because I may end up looking to refer it to you because I am not going to try and be an expert in something that I'm just going to stumble and fumble through. I don't even have access, for example, with the Sandicor, the MLS. I just don't do residential. That's not what I do. I have no problems telling someone that I can help them out. And the best way that I can help them out is by simply getting them connected with a professional that does it every day for a living. So how can you make money in the commercial real estate world? By just simply asking your current sphere of influence, great questions. And for, for the males that are on this call, I mean, one of the ways that we identify ourselves is by our career, by our job, what we do. So it's very natural, for me to talk to another guy and say, hey, what do you do for work? And then usually that's going to start a conversation. And just by you simply asking very organic questions that aren't going to come across as odd, it's giving you additional background on your client. It also could potentially plant seeds where, oh, you can help me with commercial real estate as well. And the answer is yes, you can. So, so I would say, ask your clients, your family, your friends, ask them great questions about where they work. How are things working out at your current organization? Do you need more or less space? And the two bullet points in the second box is, if there's too much space means if they own it, then perhaps they can lease it out. If they have too much space and they're a tenant, then perhaps they can sublease the space. And they're going to also look to downsize in the future. So just ask great questions, and that will lead to opportunities where they're going to turn around and they're going to connect the dots and say, oh, well, you're in real estate, so therefore you might be able to help me with my commercial real estate problems or challenges. So here's a couple of, questions for you to ask. The third question, I think we should talk about that. Most businesses are going to lease, the majority. When you drive by, call it UTC, and you look at building signage as an example, downtown or Del Mar Heights area, most of those eyebrow signage on those office buildings, those are tenants. Those are not, they don't own that building. Some do, but the vast majority don't. And so asking a question, when does your company's lease expire? Usually a lease expiration is a jumping off platform for a company making a lot of capital decisions, whether it be hiring, because if you don't have space, you're most not likely not going to look to hire until you have the space to accommodate the new talent. Or if you're looking to equipment purchases, inventory, telephone systems, all kinds of capital improvement that a company may need, the first thing that needs to happen is they need to have a location, an operation to work out of. So, you'll find a lot of companies, they'll base their future growth based on when their lease expires. So asking some of these very simple questions, what do you do? Where do you work? Do you have enough space? Do you not? Do you need more space? These are all going to start conversations where that now you're going to be empowered with the ability to either A, work on it yourself if you're an, an expert and you're capable of from cradle to grave handling a transaction, or you end up referring it out, go ahead and make 20%, and you gave someone a name and a number, and then you get to collect a check in 6 to 12 months when that goal has been achieved. And yes, in my world, sales cycles are very long, and it's not like in the residential world where you can find a buyer and within 30 days they've moved in and it's done. It's a much longer sales cycle in the commercial world. Does anyone have any questions on this slide before we move forward? Let's keep it moving. So why commercial? So, I'm going to assume, and I would love for someone to jump in, but the average single family residence in San Diego County is going to be $1 million-ish, maybe $1.5 million, 2 million. Now you're probably getting closer to the coast. You're probably going to be west of the I-5. And now you start getting into the higher levels on the residential world, where in the commercial world, an entry level building, yeah, you can find some under $2 million, but those are going to get pretty small. On your leases, most leases that you see are going to be a minimum of 3 years. They could go as long as 10. Sometimes you'll see longer, not usually though. So call it 3 to 10. 3 to 5 is really the sweet spot for most businesses when they do a lease or a lease renewal. And so as a result of, these longer commitments that these organizations make, you tend to have higher commissions in the commercial real estate world. So it pays to ask your existing sphere of influence great questions. Any questions? Hey, Bailey, would you put your contact information in the chat? Because I'm going to tee it up for you in just a minute.
Yes.
Thank you. So how folks could contact you for financing requirements, please. So what makes a deal work? Location. Obviously, that doesn't change much from the residential and the commercial world, but it can get much more nuance. So what you'll hear about in the commercial world are going to be daily traffic counts and then demographics. Obviously, the demographics are going to look a lot different if you're looking for a space in the UTC. That's going to be more location based and it's going to be less demographic, although you're certainly your talent and where they work, that's going to be higher wage labor. And so as a result, they're going to work along the coastlines. And so, yes, you're going to need a Del Mar Heights or a UTC location. So it's slightly different, the residential and the commercial world. And as far as asset classes, there's essentially four pillars, four food groups within the commercial real estate world: office, retail, industrial, and just call it multifamily. I got mixed use here, but those are going to be your four pillars of commercial real estate. And then there's some offshoots. There's going to be self-storage. There's going to be special purpose, but those are the exception and not the norm. Most of your spouses, as an example, they probably work out of an office, retail, industrial type building. And multifamily, that's just a fancy way of saying apartments. Something that maybe you'll cross paths with in the residential world on the tenant quality is, if you got a buyer that wants to buy a home, well, the first question I would assume you would probably ask is, how are you going to pay for it? And if they need to get a loan, you want to make sure they're well qualified. So and Bailey's going to touch on this in just a minute, but in the leasing world, tenant financials are important, especially when you start talking about tenant improvements and having the landlord potentially participate in tenant improvements or rent abatement. So, for example, if a company moves into a location, they can't just grab keys and start making money day one. They've got to set up shop. If they're a production company, that's going to take up time for their manufacturing process, IT, moving the team over. It takes time. It just doesn't happen. So you're going to have a period of time. It could be 30, 60, 90 days. It all is nuanced, but there's going to be a period of time where they have keys and they're not necessarily making money. And as a result, they're not going to want to be paying rent. So that's where the landlord is going to take a very hard look at the tenant's financials to make sure that, hey, this is a good bet, because we've got to allow them to get the plane off the ground, so to speak. And financially, are they going to be able to pay us throughout that 60-month term, as an example? Any questions? How to evaluate earnings potential. So, those of you in the residential world, you're doing a sales comparison approach when, as far as an appraisal goes, you have someone that wants to sell a home in a particular area, and you're going to look at the three best comps within the last 6 months on a price per square foot. And that's how you're going to, essentially get a value on a residential home. In the commercial world, for owner users, there is some similarity there. If you have someone that is looking to buy a property where it's purely an investment and it's an income producing property, then it's completely different. And now we're going to start talking about cash flow, and we're going to want to understand what the expenses of the building are, because we want to back out all of those expenses. So we ultimately get to a net operating income. And then from a net operating income, we go to number 2, which is a cap rate. And essentially think of cap rate, interest rate. The higher the interest rate, the more risk there is on the deal. If you're buying a multifamily, which again is apartments, those are going to be very low risk, because if someone moves out, all you got to do is put some new paint, carpet. Within a week, you can turn around and have that re-tenanted very quickly. So your risk on multifamily is going to be pretty low. You usually don't see, C and B type multifamily buildings staying vacant for very long. So therefore, the cap rates are going to be low because there's low risk as a result. And again, cap rate percentage, it's your yield, your return on investment. The lower the risk, the lower the cap rate's going to be. Higher the risk, the higher the cap rate's going to be. So if your cap rate is low, means the sales price is going to be high, and then the inverse also. If your cap rate is a 8 cap or a 10 cap, then that means there's a lot of risk there, so it's going to be a lower purchase price. Any questions on that? And by me just simply explaining cap rates, then that'll turn around and you'll be able to identify opportunities that maybe your client that's a pill that they would or would not want to swallow. All right, so partnerships, financing, super important in the commercial world. One of the things that makes me a juggernaut in the commercial world is the fact that I can plug in a tenant improvement contractor. I can plug in someone like Bailey on the financing side. So let's talk a little bit about financing a commercial building. It's completely different in the residential versus commercial. Your residential loan officers most likely would not know how to handle or process the way you go about an SBA loan, which an SBA is the lowest down payment out there, 10%. Having great partners to help facilitate a transaction is super important, whether it's an architect that can put a space plan together because you got to do some tenant improvements. Tenant improvements in the residential world, you'd call that like a remodel or construction. In my world, we call it TIs. So having great individuals that I can plug into a deal, trusted advisors that's going to help move that deal, help with that client, give them the best experience possible is super important. One of my partners that I have is Bailey Wolf, who is on the call, and I didn't check, but hopefully you provided your contact information, Bailey. Could you give 2 to 5 minutes, talk a little bit about what you do, the value that you provide to potential clients like mine that are looking to buy a building?
Yeah, for sure. Thanks, Tim. I don't know how to turn my video on. Maybe it doesn't matter. I can just talk here. I put my contact information, and then I also put CCIM San Diego, which is where Tim and I are both members, certified commercial investment member. A lot of the information he's talking about cap rates and how to help clients evaluate their purchase transactions is taught through that. It's a great partnership with the Real Estate Association in San Diego. I work for a company called Harvest Small Business Finance, and we specialize in the owner-occupied commercial real estate space. So small businesses that want to buy buildings rather than rent them. And the SBA loan program that Tim has highlighted here, he already said it, but really the biggest benefit of that program when compared to conventional financing is the low down payment. If you have a business owner that's able to put down 30+% to buy a building and has a strong track record operating their business and is profitable, then conventional financing might be the way for them to go. But often it's the down payment or wanting to hold on to some of that cash, even if they might have the 30%, but they want to put down a smaller down payment. The SBA 504 loan is a combination loan between the U.S. Small Business Administration and then a bank or a finance company. So you can get an SBA, or your clients can get an SBA 504 loan with Bank of America, for example, which I kind of think of financing options as like a stream. So Bank of America would be like the headwaters as far as interest rates are concerned. Everybody's always talking about interest rates, obviously, because it's business and it's financing the real estate, but your Bank of America is at the top, and they might do an SBA 504 loan at 5.5%. I'm not even sure. I've heard that they can basically do anything if they want the client bad enough. And then on a 504 loan, you could go all the way down to a private money lender who might be able to close the loan with the SBA, and they might be, as high as 12%, depending on where they are. Again, the main thing is the down payment is small. And then the other thing that the SBA loan can do, which a conventional loan cannot do, is in the SBA world, we call it projections, but you might think of it like a pro forma, where you have either a startup business that doesn't have tax returns that they've filed that shows strong profitability, strong track record, or maybe they are expanding into a new location. So they maybe at location 1, they've been running their, let's call it a restaurant, and they're doing well, and they want to buy a second location, but they have no operating history at that second location. Or maybe they've been operating a sushi restaurant and they want to open a Mexican restaurant. So as the lender looks at it, there's more risk there. And the SBA loan, with its structure where the SBA is taking some of the risk off of the lender, then that projection-based scenario works with the SBA loan, where it doesn't work usually. I'll never say never. There's always an exception. But on the conventional side, they want more of an operating history with track record of profitability. And I'll just say one last thing is also, I think like with VA loans and I don't know, in the residential world, often the interest rates are lower, as well as smaller down payment. And it's usually not the case in the SBA world. It's usually the case, yes, the down payment is smaller, but when you're moving into the SBA product, oftentimes the interest rate is going to be a little bit higher than what the client would pay if they were getting conventional financing. Again, because it's a risk-based loan product, they're taking on more risk. So how they mitigate that is by raising the interest rate a little bit. So I don't know
Bailey,
if that's, yeah,
let
go
me
ahead.
interject something, and then I would love for you to just respond to it. So, SBA is going to be an owner user, and correct me at any point, Bailey, but so an SBA is going to be a small business, call it a contractor, someone that's created a widget, someone that's come up with something and they've started a business from the ground up. And now they're tired of paying rent and they want to start building equity. So what they'll do is they'll look to buy a building. Typically, they'll do an SBA loan. Maybe they'll do conventional. Conventional is going to be 25 to 30% down payment. SBA is going to be 10%.
Yeah.
So Bailey, would you talk a little bit about the SBA versus conventional versus the investor and the interest rates, and why are they so? So as an example, why are residential interest rates going to be so low? Because you're going to let everything else, you're going to give up the business, you're going to give up the car, but you're going to hold on to that house when you got a wife and kids for as long as you possibly can. Lowest risk, lowest interest rate. And then they start going up. Bailey, could you touch base a little bit on that with the SBA, conventional, and investor?
Yeah. And two, they're all each loan that you get. So like, let's say investor, let's say you've got a apartment building that you want to buy, and the debt service of that building at the loan amount that you're approved for. Let's say it's a 1.25. So that means that for every $100,000 of debt, you've got $25,000 additional money left over after all expenses are paid for reserves. Actually, 1.5 is a more conservative number, but you're going to get like a life insurance company is in the business of lending to investors who are very highly qualified, and it's their business to develop and or purchase these apartment complexes around the United States. They've got a demonstrated track record of doing so. And so those are some of the lowest interest rates in the market, because the lender is also after a low, secure yield or return on its investment. And then the sponsors or the people doing the projects are among the most qualified and they're experienced. So you get the lower interest rates there. Bank of America jumping to a 504 SBA loan structure. They want medical professionals. They want specific business industries with, again, track records of high earnings, high net worth. The bank is going to look at the assets that the individuals have both personally and in their business. They stress test the loans. They take away certain customers. They add these unusual situations and say, how profitable would the business still be if they were to lose all these customers, or if this location were to go out? And then if they're still profitable, if they still meet their matrix and they're in the industry that they like and the individuals are high net worth, then they're willing to make the loan. So that's the low interest side of the SBA world. And conventional is similar. It's based on the index that the lender is lending its money. There are lots of different ones: the Treasury, Wall Street Journal Prime, secured overnight Fed's rate. A bank chooses its index, the rate that it borrows or lends off of, and it also relates to the cost of the money that they are lending out. And oftentimes banks are lending money from their depositors, and so the money is essentially free. It's earning interest for them, whereas a private lender is lending out money that they borrow from someone else, so they have to make more money off of it, thereby making a higher interest rate spread.
Higher interest rates.
So it goes across that whole range from, depending on the borrower, it also depends on the real estate. So let's go back to an SBA loan. A small business wants to purchase a gas station, or a small business wants to purchase a industrial warehouse. The lender will look at the real estate type and say, okay, so this gas station is a special use property. It probably has tanks in the ground. It might have some special structures on the property. If this gas station stops operating here, who else is going to operate here? It'll be hard to put someone in it. Whereas if you have an industrial warehouse, it's easy for a lot of different users to use that space. And so that affects the loan as well. The real estate type and how usable it is by different businesses.
Bailey, that was great. Thank you so very much. So let me put a bow on this slide. Partnerships are so very important. He touched base on environmental. We'll get there in a minute. But Bailey is on my team. He's one of my go-to partners when I've got an owner user that wants to buy a building, wants to stop paying rent and start building equity. Bailey's a great resource because he can work with all of the banks, and he's a great person that can help facilitate a transaction. So whether it's architects, contractors, insurance folks, the commercial world is very specialized, and your residential contacts may not be able to help fulfill those assignments for your clients. So Partnering up is really important.
And architects.
Any questions on this before we move on? So some pitfalls you just want to be aware of. So we talked about due diligence, environmental assessment, tanks in the ground, just any transaction that you do on the purchase side, an environmental assessment is going to be part of the process. So you want to know what that looks like. What is a phase one? What's a phase two? What does remediation look like? Those are things you're not going to have to worry about in the residential, but yes, you will in the commercial. Zoning is a really big one. If you're representing a tenant or a buyer for a commercial building, do not put them in a location that they can't get a business license out of. That is a quick way to end up in front of attorneys and judges, and you don't want to be in that position ever. So, understanding zoning, what that premises is allowed to do, and how you can get a business license in there is super. Or if you can't, you want to know that early in the game. Leasing. So, you know, I don't see this so much in the or I don't hear about it. You don't hear about attorneys getting involved in contracts in the commercial world. I would say it's 50-50, and it really depends on the size of the business. The bigger they are, the more likely at a minimum that they'll have in-house counsel or that they'll retain a law firm outside. So having individuals look at contracts, whether it's leases or purchase agreements, is much more common in the commercial world. Market cycles, I think this is going to be where there's going to be a lot of similarities, both in residential and the commercial, although where you'll find it interesting is it's not all the same all across the board. So for example, industrial, post-COVID, think of Amazon and last mile distribution, all your retailers that you would buy stuff from online. Those businesses blew up, and there was a point where Amazon absorbed 30% of all the industrial product that was available across the United States of America. And then what happened is, so there was no industrial space available, pricing went through the roof, and then come to find out that the e-commerce their growth wasn't exponential, and they absorbed too much space, and then they started giving it back, subleasing it, etc. And now vacancy rates in the industrial market are not healthy at all. They're close to 12% in the San Diego County. So industrial is not strong. Office right now is not very strong. Overall, you're close to a 20% vacancy rate in the office market. And yes, that is the COVID impact. I would say interest rates have also played a big role in that. One of your biggest job providers in San Diego County is going to be the life science industry or tech engineering. A lot of those companies may not necessarily be profitable on day one. It may take them several years to ramp up. So those are going to be capital intensive businesses that have a monthly burn rate. So the interest rates, when the interest rate market doubled very quickly within 12 months, a lot of those capital structures didn't work. And then all of a sudden, those companies that weren't profitable were struggling to find cash to keep their business going. So the office market has struggled. Also, the work from home, that's real. That's not going away anytime soon. So the office market has struggled. But on the retail side, retail has never let its foot off the gas, and it's been strong and continues to be strong. Multifamily, there's just simply not enough housing units, as I know this group would know that better than most. And so as a result, the multifamily world is strong. So you can't paint a super big brush across all the asset classes in the commercial world. It is very nuanced. In the industrial world, office not so strong, others it is. So it's very case by case. Some other pitfalls to just be aware of when it comes to commercial real estate maintenance. Oh my goodness, this has been big with regards to insurance, and what insurance providers are requiring, anything that could be a potential fire hazard, like upgrading an electrical panel for the main switch gear, things like that. And those are big ticket items. Those can be very quick 50 grand, checks that you got to cut. And if you don't cut them, then your insurance company is not going to insure you. And guess what? All the other insurance providers, they're not going to want to work with you either, because they're going to view that older electrical equipment as a potential fire hazard. So maintenance and insurance has something that has bitten a lot of commercial owners in the butt over the last year. So that's something you want to be mindful of. Taxes, obviously. So, just some things on the expenses side. It's not as straightforward as you may think. And then obviously, poor tenant screening, that gets back to tenant financials. It's a real big deal in the commercial world, and understanding whether you're representing the tenant, the occupier, you want to know that as early as possible, because if you're working with a startup company, as an example, that doesn't have a whole lot of credit or hasn't filed very many years of tax returns, you want to know that up front, because your institutional groups, your institutional owners they're going to be risk adverse, and they may not want to work with that type of a tenant. So there's just a lot of factors to consider in the commercial real estate market, and I highlighted some of the pitfalls to avoid. Any questions on this? So I went over this slide with what's hot and what's not. I think I'm just going to keep moving on unless anyone has any questions. So, as we look to wrap this up, have a strong team. If you haven't done a dozen leases or a dozen commercial real estate purchases, look to partner with someone. I would love to, be that person. I showed up late to this meeting, and as a result, if you guys are like, no, Tim, I don't want to work with you, I'll point you in the right direction, as an example. But let's talk a little bit about CCIM. So CCIM is a way where you can sharpen your sword in the commercial real estate. The education is world-class. It's second to none. So if you want to understand the nuances of purchasing investment product, how does Home Depot put a new location in a rural area where there's not a whole lot of development, but yet I don't see Home Depot going out of business? How do they figure out where a Starbucks or a Home Depot or a fast food location, how can that work, even though there's not necessarily, it doesn't seem like there's a lot going on a specific location? Well, the CCIM world, we learned to assess business trends and cycles and where the growth is coming. So I would invite any of you to look into CCIM education and training if you're really serious and you want to make commercial real estate a staple in your income. My cell phone, my email is here. Bailey, thank you so much, buddy, for hopping on and giving a once over on the financing side. And I'll open it up to any questions for anyone.
Great information, Tim. And Bailey, thank you for your precise information on financing, the value of the difference between.
You bet. Thanks for having us.
Okay, with that being said, thanks so much for hopping on. I wish you guys all the best. If there's anything Bailey or I can do to help you out with a client, with a goal that one of your clients have, we would love to participate. So with that being said, I'm going to end the call, and thanks so much. Well, have a great day. Thank you.
Thanks, Tim.
Bye-bye.
Bye-bye.